Hello, thank you for joining us today on the Profit Scale Thrive podcast, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I am your host, Kelly Brubaker. We have a secret though. This is a special place because we don't work with every law firm owner. We support the solo attorneys who are also single parents because we know the special challenges you face, and we know the business advice out there is not always practical for you and your firm. Each week, we will talk about things that will give you the insight you need to stop feeling overwhelmed, to gain back your confidence, and to finally enjoy your law firm and your life again. Hello, and thanks for joining me today for podcast episode number 20. And today we have an exciting topic to talk about: looking beyond your billable hour goal and measuring the true success of your firm. Let's master the numbers of your firm by setting up the right metrics or key performance indicators. These are also referred to as KPIs. KPIs provide a clear and objective way to measure the performance of various aspects of your firm, such as income, marketing, operations, and customer satisfaction. By regularly tracking KPIs, you will be able to identify trends, spot potential issues, and make data-driven decisions to improve overall performance. KPIs help align the efforts of different teams and individuals within your firm with your overall strategic goals. When employees know which metrics matter the most and how their actions contribute to those goals, they can stay focused on what truly drives success, leading to higher productivity and efficiency. KPIs also serve as early warning signs for potential problems or challenges in the business. If certain KPIs start to decline or deviate from the target, it can alert management to take corrective actions promptly. This proactive approach can prevent minor issues from turning into a major crisis. KPIs provide valuable data and insights that support informed decision making. Rather than relying on intuition or guesswork, partners can base their strategies and tactics on concrete data, leading to more effective and successful decision-making processes. KPIs enable businesses to benchmark their performance against industry standards of competitors. Understanding where the firm stands relative to others in the market can help identify areas for improvement and set realistic performance targets. Now, you might think that tracking numbers may be overwhelming, but it doesn't need to be. Some law firm practice management software like Clio and MyCase and accounting software like QuickBooks will provide a KPI dashboard with a handful of metrics, which is nice, but in my experience, critical KPIs are usually missing or they're located in multiple places. So I work with my clients using simple tools like Google Forms and Google Sheets for KPIs. The data is then summarized on one dashboard, making it easy to track progress and compare trends over time. Once a firm has created its dashboard, I highly recommend sharing it with the entire firm. And I know that may sound scary, but I've seen it repeatedly how it brings everyone within an office together. Each team member should pick a number that they want to impact between staff meetings. For instance, a paralegal may focus on the firm's conversion rate, while a lawyer may focus on average case value or average case duration. The transparency of your firm's performance will help to strengthen the team's culture. Employees feel motivated and connected to the business as they better understand the impact of their contributions. This will translate into improved efficiency, but also result in happier clients who are more likely to refer new clients your way. So, what should you track? While there are an infinite number of possible KPIs to track, here's my recommended top 10 KPIs for law firms. I suggest tracking 3 to 5. It's essential to pick the metrics that relate to the specific goals and areas of focus for your firm. For each KPI, I will describe the metric, why you would want to measure it, what data you will need to collect, how to compute it, and finally, a suggested target. So let's dig in. First up, Revenue and profitability. Measure the firm's total revenue and profitability regularly. This includes tracking overall income, expenses, and net profit to understand the financial health of the firm. So, why do you track it? Well, monitoring revenue and profitability is fundamental for any business, including law firms. It provides a clear picture of the firm's financial health and whether it is generating enough income to cover expenses and make a profit. Regularly reviewing revenue and profitability allows the firm to identify trends and make informed financial decisions. It helps spot any declines in revenue or unexpected increases in expenses, enabling the firm to take corrective action promptly. So, what information do you need? You will need to collect total income generated from all sources and total expenses, including operational, overhead, and other costs. So, how do you calculate it? You want to look at total revenue, which is simply just the sum of all income generated, and look at net profit, total revenue minus total expenses. So, the target to aim for revenue and profitability will depend on the specific size and goals of the law firm. Generally, the aim is to achieve consistent growth in revenue and maintain healthy profitability with a net profit margin of 15% to 25% being a common target for small law firms. KPI number 2, client acquisition rate. Monitor the number of new clients the firm acquires within a specific period. This KPI helps assess the firm's marketing and business development efforts. So, why do you track it? Well, tracking the number of new clients acquired within a specific period is crucial for evaluating the effectiveness of the firm's marketing and business development efforts. Reviewing the client acquisition rate helps the firm determine which marketing strategies are working well and which ones may need to be adjusted. It allows the firm to allocate resources to the most successful marketing challenges. So, what information do you need to collect? It's simply by counting the number of new clients acquired within a specific period. How do you calculate it? Your client acquisition rate equals the number of new clients acquired divided by the total number of clients multiplied by 100. The target to aim for, it can vary, but aiming for a growth rate of 5% to 10% per quarter or year is a good benchmark for small law firms. KPI number 3, case acquisition rate. Track the number of new cases or matters that the firm takes on. Understanding the case acquisition rate helps evaluate the firm's ability to attract and retain clients. So, why do you track it? Like the client acquisition rate, tracking the number of new cases the firm takes on provides insights into the firm's ability to attract and retain clients. Reviewing the case acquisition rate can reveal trends in the types of cases the firm is handling. It helps the firm focus on its core practice areas and understand which areas might require more attention or promotion. To compute this KPI, you will need to collect the following information. Simply count the number of new cases or matters accepted within a specific time period. So, how do you calculate it? Your case acquisition rate is equal to the number of new cases or matters divided by the total number of cases or matters and multiply that by 100. The target for case acquisition rate can also vary depending on the firm's practice areas and growth objectives. Aim for consistent growth in the number of new cases with a target of 5% to 15% increase per quarter or year. KPI number 4, conversion rate. Measure the percentage of potential clients who become paying clients. A higher conversion rate indicates effective client intake and engagement processes. The conversion rate measures how effective the firm is in turning leads into paying clients. It reflects the efficiency of the firm's client intake and engagement processes. Reviewing the conversion rate allows the firm to identify any bottlenecks or shortcomings in the client onboarding process. It takes improved client communications and ensures that leads are not lost due to poor follow-up or engagement. So to compute this KPI, you will need to know the number of leads or potential clients and the number of those leads who have become paying clients in a specific period. So the calculation for your conversion rate is the number of paying clients divided by the total number of leads divided by 100. Aim for a conversion rate of 20% to 30% or higher to indicate effective client intake and engagement processes. KPI number 5, average case value. Calculate the average revenue generated per case. This KPI is valuable for identifying high-value cases and optimizing case selection strategies. By understanding the average value of each case is essential for the firm's financial planning and budgeting. Reviewing the average case value helps the firm identify high-value cases and clients, allowing the firm to focus on matters that bring the most significant financial return. So what do you need to know? You need to know the total revenue generated from all cases in a period and then the number of cases handled. So how do you calculate it? Average case value is the total of revenue from cases divided by the number of cases. The target for average case value can vary depending on the firm's focus and clientele. The aim is to identify and take on higher value cases, leading to increased revenue. Setting a target of 10% to 20% growth in average case value can be reasonable. KPI number 6, average case duration. Measure the average time it takes to resolve a case. This KPI helps identify potential inefficiencies and areas for process improvement. By tracking the average time it takes to resolve a case, it will provide insights into the firm's efficiency and productivity. Reviewing the average case duration helps identify areas where the firm can streamline processes, reduce delays, and improve client service. It can also assist in setting more accurate timelines for clients. So to look at this KPI, you will need to know your start and end dates for each case. To calculate your average case duration, it's the total duration of all cases divided by the number of cases. The target for average client duration may differ based on practice areas. Aim to streamline processes and reduce average case duration by 5% to 15% to increase your firm's efficiency. KPI number 7, client satisfaction and feedback. Gather client feedback through surveys or testimonials to gauge their satisfaction with the firm's services and identify areas for improvement. Satisfied clients are more likely to provide repeat business and refer others to the firm. Tracking satisfaction helps gauge the firm's reputation and client loyalty. Reviewing client feedback enables the firm to address any issues promptly and make improvements in its services. It also highlights areas where the firm is excelling and can be used for testimonials and marketing. So to look at this KPI, you will need to gather client feedback through surveys, testimonials, or other feedback mechanisms. You'll analyze feedback qualitatively to identify areas of satisfaction and improvement. If you structure your survey with stars or numbers, that will give you a quantitative way to identify areas of satisfaction or improvement. The target for client satisfaction is to continually improve service quality and maintain a high satisfaction rating. Aim for a satisfaction score of at least 8 out of 10. KPI number 8, billable hours and utilization rate. Track the number of billable hours worked by attorneys and staff and calculate the utilization rate. This KPI helps optimize resource allocation and productivity. Billable hours are a primary source of revenue for law firms. Tracking them is essential for understanding how much work the firm is performing for clients. Reviewing billable hours and utilization rates helped optimize resource allocation and productivity. It ensures that attorneys and staff are working efficiently and that their time is appropriately distributed across clients and cases. To compute this KPI, you'll need to know the number of billable hours logged by attorneys and staff and total working hours in a specific period. To calculate your utilization rate, it is the total billable hours divided by the total working hours divided by 100. Aim for a utilization rate around 60% to 70% or higher, indicating effective resource allocation and productivity. KPI number 9, aging of accounts receivable. Monitor the average time it takes for clients to pay their invoices. Reducing the aging of accounts receivable improves cash flow and financial stability. So, tracking the aging of accounts receivable provides insight into the firm's cash flow and financial stability. Reviewing the aging of accounts receivable helps the firm identify clients who are consistently late paying their invoices. It enables the firm to follow up with clients, implement better payment processes, and avoid cash flow problems. To compute this KPI, you'll need to know invoice dates and payment dates for clients. To calculate aging of accounts receivable, it is the average time taken for clients to pay their invoices. The target for aging of accounts receivable is to reduce the average time it takes for clients to pay their invoices. Aim for an average aging period of 30 to 60 days or less. And lastly, KPI number 10, employee turnover rate. Measure the percentage of employees who leave the firm within a given period. A high turnover rate can be indicative of underlying issues with firm culture or management. Employee turnover can be costly and disruptive to a law firm. Tracking this rate is essential for understanding the firm's work culture and employee satisfaction. Reviewing the employee turnover rate helps identify potential issues within the firm, such as low morale, inadequate compensation, or lack of growth opportunities. Addressing these concerns can lead to higher employee retention and a more productive work environment. The information you'll need to know for this KPI is count the number of employees who left the firm during a specific period and the total number of employees. To calculate this KPI, it is the number of employees who left divided by the total number of employees multiplied by 100. The target for employee turnover rate is to maintain a stable and engaged workforce. A turnover rate of around 10% or lower is generally considered healthy for small law firms. However, the specific target may vary based on industry benchmarks and firm size. So that's my top 10 KPI list. Overall, tracking KPIs empowers businesses to measure progress, identify opportunities, and address challenges, ultimately leading to improved efficiency, profitability, and sustainable growth. And now it's time for our listeners' question of the week. This week's question is from Alec. I saw your video on YouTube where you showed how you are moving money to the different bank accounts for Profit First. And I listened to your podcast episodes where you reviewed the Profit First book. So I think I understand where the percentages come from and what you're doing. But my question is, did I understand you correctly in your video when you said that you run your firm on 40% of your income? Because that seems way too low. Hi, Alec. Yes, doesn't it seem too low to only spend 40% of my firm's income on operations? Well, let's dig into the numbers to see what's going on. First, consider that other than myself, I only have one part-time employee. She's hourly and she's fully remote. So my payroll costs are low at the moment. And keep in mind that my operating account does not include my salary because I own the business. When you add my salary to my operating account, that's now 87% of my revenue, which is probably more along the lines of what I think you may have been expecting. And profit first is the reason I look at my firm the way I do, with 60% of my firm's income being set aside for me as the business owner for profit, wages, and taxes, and only 40% to operate my firm with. With profit first, I'm making sure that my firm is profitable and that I'm being paid an adequate salary. I do want to note that I have a target client level that when I reach it, it will prompt me to open a new bank account to start saving for wages for a new hire. That money will then cover their wages for when from the time that they're hired and getting onboarded with my firm. So, yes, it may seem outrageous to say that my firm operates on 40% of my revenue, but that really is the current situation. If you would like to submit a question for a future episode, please send an email to podcast@profitscalethrive.com. This week's inspirational quote is from Gabrielle Coco Chanel. How many cares one loses when one decides not to be something, but to be someone? Final thoughts for today. Lots of numbers, right? Is there a KPI that you track for your firm that you can't live without, but it wasn't on my list? I'd love to know about it. Please comment on this video or send an email to me at podcast@profitscalethrive.com. So where should you start? Well, the first step is to start simple. Take a blank sheet of paper and write down the numbers you'd like to track. Gradually evolve from there using tools like Google Forms for easy capture of data and Google Sheets to see the results and the trends. Google Forms is nice because you can create a set of questions that, as they are answered, will populate with raw data into a Google Sheet. And then from the Google Sheet, you can do the necessary calculations to get your KPIs. And then once your KPIs are calculated, you can set up a few graphs to see trends easier. But if you or your staff person who will be gathering your raw data is comfortable with entering data directly into a spreadsheet, the Google Forms not necessary. Google Forms are just a way to help streamline the data gathering step. Something that I do want to point out is that if you look at the data needed for each calculation, you may have one number needed multiple times. So you'll only need to capture that data once when you update your metrics. And Google Sheets can then refer to the one number in multiple KPI calculations. The next step is to decide how often you will review your KPIs. And this answer depends on which KPIs you select to track. Some data will be available daily, weekly, or monthly. The raw data will determine your review schedule. Personally, I like metrics that are weekly because it's an easier habit to get into, as well as a good time frame that if something is going off the rails, I can react faster. I do recommend using technology and practice management tools that can simplify data collection and analysis. Regardless, however you gather and store your data, reviewing your KPIs will allow for more informed decision making and better overall performance. You'll be amazed at the positive impact it can have on your firm and your team. Before I sign off for today, for listeners of my podcast, you have an opportunity to get a copy of my newly published book for free. It's called Stop Struggling and Start Thriving, a guide to transform your law firm. You can download it free, the PDF file, when you click, I'll leave the link in the show notes. It's also available for purchase on Kindle or in paperback, and I'll also leave that link in the show notes as well. If you have any questions about today's episode, feel free to comment if you're watching on YouTube or send me an email to podcast@profitscalethrive.com. If you know someone who might need to hear this information, please share this episode with them, or if you're on YouTube, tag them below. Be sure to follow and subscribe to get notifications for future episodes. Did you enjoy this episode? Please consider leaving a review. And before I go, remember, profit is something you intentionally plan for in the beginning. It is not a potential bonus at the end of the year. Thanks and have an amazing day.